Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. So, the big picture here once more continues to be centered around the late September 24 to late March 25 bearish Andrews pitchfork, which is highlighted in dark blue on my daily chart. Prices based themselves 7 weeks ago and then again briefly 5 weeks ago on the middle time, which is currently 89.01, as well as back then the 50% Fibonacci line for 2025 at 91.33. And the market had passed up through on both occasions over what had been resistance at the combined 38.2% Fibonacci line, the October 20 to May 23 move at 92.56, as well as both the mauve medium moving average, currently 94.24, and the gold long moving average, currently 93.67. However, the push upwards was met by a fresh cap from the combination of three specific nearby congestions. The first is the 50% Fibonacci line, the October 23 to May 24 move at 94.80. This is an integral part of the 93.95 to 96.06 congestion. The second had been the bright red neckline extension, currently at 94.88, of the recent November 24 to February 25 reverse head and shoulders bottom, though this is acting more as a support since mid-May. Finally, the third is the green flatlining short medium moving average, currently 94.81, which likewise is acting more as a support these days. Eventually, the market stabilized over these, but it is still caught just about within the original and well highlighted 93.95 to 96.06 congestion. However, the early ammunition gathering exercises lower down are now starting to be deployed in an attempt to try higher out of this congestion band. I'd now like to once more recap, as I've mentioned here so many times before, of the three congestions we seem to be working our way through. The first was between 91.83 to 91.86, quite thin, and is the weakest of these congestion areas. The second is where we are now, between 93.95 to 96.06, and the one we have been clogged down within these past few weeks. The final one is higher up, between 97.50 to 99.95. Overall, things are much as I have said these last few weeks, and I quote, "We seem to have yet another attempt higher in the offing, but I am beginning to wonder how often prices will keep ramming into this overhead 93.95 to 96.06 zone before it becomes discouraged. Just bear in mind this large congestion area we are within and which stretched further overhead between 93.95 to 96.06. It may take some time to chew through it." End of quote. We have indeed been chewing through it for quite some time, but we might now, with higher lows, just maybe, be starting to emerge on the upside. It will be the cruelest of blows to bulls out there if the ammunition for this attempt higher should finally run out anytime soon. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. To start with, and it's by far the most consistent one, is the bright red, shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time, which is currently at 26.55. But, as I stated 9 weeks ago, and I quote, "It was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, and that's currently at 23.46, end of quote. I added 8 weeks ago to this, and I quote, "This is one to keep on this daily chart, as the low of the move has been right on the bright red lower time." Additionally, nearby, we have the bright green neckline, which is currently at 23.59, the October 22 to May 23 head and shoulders top, and the purple neckline extension, currently at 23.65, of the March to May 23 head and shoulders top. Both these have been pierced, but we have not as yet closed below either, end of quote. Well, since then, we've seen the bright red lower time punctured, but repaired with no closes below it. And this action worked pretty well at showing the low the recent move down. The bright green neckline was breached, but with only one close below it. And the purple neckline was breached with two closes below it, but one of those was barely below. Thus combined, these three eroded the bearish incentive enough to halt the immediate declines mid-April. Basically in between the bright red lower time below and the broken pink lower time above, currently at 24.44, of the breach and are possibly looking to be repaired bigger and much longer term, November 2015 to April 2020 bullish Andrews pitchfork. From late April to date, we've seen a number of attempts at piercing higher, up through the significant 50% Fibonacci line of the December 23 to May 24 move at 24.54. I referenced this 50% Fibonacci line because I did say 10 weeks ago, prior to all the big moves down, that, and I quote, "In truth, I could see any significant move down carrying on till the 50% Fibonacci line of December 23 to May 24 move at 24.54, end of quote. I thereby noting its importance. However, I do note that we seem to be pressing down below the 50% Fibonacci line nowadays. I put this down to one simple pressure, the bearish pressure of the green declining short medium moving average above, currently at 24.76. So, looking back 6 weeks ago and ever since, I said, and I quote, right now I'd say the market is contemplating one of two actions, to either treat this as a potential bearish halfway hesitation move, or do what it did back in July and August last year at the approximately the same levels, and turn back upwards. I'm watching prices and their reactions to the overhead pink lower time and the bright red lower time below, and I'm also on the watch out for any false breaks as well, end of quote. 3 weeks ago we saw an attempt higher that ended up being capped by the combination of declining green short medium moving average, yes that one, this is currently at 24.76, and the 50% Fibonacci line for the whole of 2025 at 25.18. And as I said afterwards, and I quote, I'd keep a close eye on that green short medium moving average. As it continues to decline, I suspect may try and push prices lower if it gets much closer to the market, end of quote. This is what we have seen done since and continue to see today. Now, I also said, and again I quote, I'm sorry there's quite a few of these, but they are important, and I quote, the action since mid-April is more akin to what we saw back in July and August last year, for now at least. So I'd look at how well we stabilize over the pink lower time, and especially what will happen should the green short medium moving average should reach the pink lower time. I suspect a possible cusp is happening with these two, but just be careful of false breaks, end of quote. This all still applies. I'm still watching these two as it's getting narrower and narrower the range, and I suspect they may both cross over sometime next week, but I am also seeing the beginnings of a small, mid-May to date, descending triangle pattern developing. I haven't outlined this on my daily charts yet, but I'm keeping a watchful eye on this as well. LME 3-month lead. The key features here, and some of them have been here for a while, all relate to a very large broken descending triangle or a related broken descending wedge pattern. Both are made up from an early July 24 to early March 25 broken purple downtrend above, now well and truly broken, though the market still seems to wish to run along the upper side of this downtrend. And for the descending triangle by a bright red broken early August to late December 24 head and shoulders neckline, currently at 19.55, which is acting as an immediate support zone right now. For the broken descending wedge pattern, this is made up from below by a dark blue broken neckline extension, currently at 18.91 of the July 23 to February 24 head and shoulders continuation pattern, as well as the common purple broken downtrend. Now 14 weeks ago, prices broke higher out of this pattern, breaking higher a second time 10 weeks ago. In both cases, this was over the now flatlining gold long moving average back then, which is currently at 20.09. But they both peaked at or just under the December 2024 high at 21.03 before turning lower. In the whole process, the market made a small March-based double top pattern, even Adam type, and turned lower, achieving all targets on the downside during April. This move lower tied in with something I'd seen here for the past few months indeed, the possibility for the action since the start of December last year setting up to make an ascending scallop pattern. I even suggested 7 weeks ago, and I quote, "The market may try it down towards the lower levels, but then turn up and go for the topside targets." End of quote. Thus, to recap all this recent action, we created over March and very early April both an ascending scallop pattern and a double top pattern, and a subsequent follow-on lower. In early April, prices broke down through the bright red neckline and the dark blue neckline, such that we can regard the move higher over March and April as a false break. To the move lower during April, I also added 8 weeks ago, and I quote, "I would like to see some more action down here to confirm that this is also not a false break," end of quote. Well, we didn't see that necessary confirmation, and prices from mid-April until mid-May have moved back up, negating any downside targets for the descending triangle pattern. During the past 5 weeks, the market started tackling specific overhead resistances formed from the mauve medium moving average, currently 1981, the green short medium moving average, currently 1975, and testing and so far being rejected by the congestion area, mainly made up from lesser Fibonacci lines between quite narrowly 2001 to 2003, plus above this the flatlining gold long moving average. We also have around here a small congestion area between about 1971 to 2021, dating from early February to very early March. So I'm unsure how good this is, though it might be seeming to have an influence on the market. This seeming stabilization over the bright red neckline and the attempted stabilization over the 50% Fibonacci line at 1971 suggests some further attempts higher. However, the resistance from the various moving averages and the small congestion, which is 2001 to 2003, seems to be better and has bracketed prices. This all now leads me once more to make a point, one I've been making all this year, and I'll continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year, in this metal, in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.